Welcome. Today we're talking with Jeff Kesler. He is the president, Dallas-Fort Worth, at Veritex Community Bank, a $12 billion publicly traded bank. Jeff, welcome, and thank you for joining us at today's Banker Digest.
Yes, good morning, Larry. Thank you for having me. It's great to be here.
Great. All right, let's get started. So, Jeff, what's the current situation in the Dallas-Fort Worth market?
Yeah, Dallas-Fort Worth, we've been blessed with great amount of in-migration from all of our people here, moving for various reasons. According to the Texas Workforce Commission, there's over 700,000 jobs have been created here in the last 12 months, 48,000 in the month of January alone, marking the 16th consecutive month that we've seen that, or the second month where we've seen every sector grow, every sector of the economy, which is unbelievable. And so unemployment is very low, less than 4%. And so our cost of living is driving that. It's certainly increasing, but where people are moving from, it's less than where they originally came from. Pro-business policies here with our state, no state income tax, and great infrastructure, and a wonderful airport that's close and easy, both international and to either coast.
Great. That's exciting with the job creation and the in-migration. So, with that as a background, Jeff, how's the real estate market doing?
Yeah, so two parts, residential and commercial. If we look at the commercial market, it's probably two different stories. This is where we saw interest rates start to increase. We're seeing great performance still in multifamily and industrial, good absorption there, in fact. Office is really the question. I do believe there's a large amount of obsolete inventory in office as companies require or want their employees to come back to the office. They're requiring great facilities for their employees, right? That's their demand. So some buildings are simply becoming obsolete, but we do see some bright spots in certain segments of Texas where office is strong. But overall, it would be a solid flashing yellow light that we're closely monitoring.
Great. Thank you, Jeff. Really exciting that the real estate market's doing well there. The growth obviously helps. So, we're also experiencing rising interest rates right now. So, what's your perspective or concerns with those rising interest rates on the bank?
Yes, so rising interest rates both impact residential and commercial. I spoke a second ago about commercial. On the residential side, we're seeing home builder activity actually increase in the month of March, and sales are higher than they were in January and February, somewhat led by a decrease in the 30-year mortgage rate, but really driven by builders' incentives to buy down mortgage rates and a lack of competition inside of resale inventories as low as it ever has been. But that interest rate risk leading into some type of cycle that we may enter into has really had everybody kind of on a wait and see look. Investors, large equity providers, capital are really on hold waiting to see what the future looks like before they deploy new projects. And overall, with rates increasing and the rate we just had, you're seeing debt service coverages tighten quite a bit to the point of there's being some challenges there, starting to see some stress, but values remain stable. So that's strong, but we are seeing stress from the rates.
Great. Thank you, Jeff, for spending time with today's Banker Digest and sharing your insights on the impacts of higher interest rates on managing the fundamentals of community banking operations. So again, thank you, Jeff, for joining us.
Yeah, thank you, Larry, so much. Great to be here today.
Great. All right. So in closing, thank you for joining today's Banker Digest. If you have additional questions for Jeff, please see the link in his bio.